the crucial role of CFOs in managing business crisis, and turnarounds, navigating uncertainty with agility and strategic leadership. So for this, our moderator would be Mr. Jagdish Baheti, Head Finance and CFO India, DELFINGEN. Along with him, we have our panelist, Mr. Nimit Sanghvi, Director Finance, Galderma, Mr. Rajesh Patel, CFO, Mahanagar Gas Limited, Mr. Amit Agrawal, President and Country CFO, Aeon India, Mr. Shabbir Imani, Founder and Director, Expenzing, Mr. Ashish Jain, CFO, Lumina Datamatics, Mr. Shirish Suvagia, Whole-Time Director and CFO, Onida.
Good afternoon. As we all know, the role of CFO has been changing drastically over the last few years from the typical finance and accounting head to a strategic role that drives the growth of the company by leveraging all the conventional tools like cash management, compliance, financial insights, but also by facilitating and using technology in all the areas of business, from supply chain to manufacturing, to customer engagement, to HR, to finance, and managing risk in the usually volatile environment. In this context, I would like to start the panel discussion. I would like to ask Mr. Nimit, how has his role of CFO evolved in responding to and leading through business crises compared to traditional financial oversight responsibilities?
Thank you, Jagdish. Before I answer that, in the morning, pre-lunch, there was in a panel discussion where Hemlata said that in the today's world, from a CFO, management is asking, ye dil mange more. And I think I witnessed that in my journey also. In my 25 years of career, I've seen how the CFO role is getting evolved. And I was fortunate enough to work as a CEO ad interim for twice, so I could see that how the transformation is taking place. Before I answer that how the modern CFO world or the probably VUCA world CFO is different from a traditional, why the change is, but the change is always there. The one thing which is constant in the CFO world is a change. But the change in the recent past, you must have seen that it's rapid change is taking place in terms of function of the CFO. And the major, if you see major pointers for that, definitely like COVID pandemic 19 was there. The customer behaviors are changing very fast. In terms of e-commerce, customer preferences are changing. Globalization is taking place. Inflations are there. Recessions in the world is going on. Also, the regulatory framework in the pre-session, we have seen the ESG, the kind of environmental social governance which is going on, taxation laws, GST. So there are many changes, and which keeps the CFOs on the toes to perform, to deliver that, making sure that there is a liquidity ratio has been maintained properly, there is no crunch in the liquidity, driving the top line, bottom line along with the CEO. So I think the role has significantly changed, and if I want to summarize it in the few pointers, I would say that the traditional CFOs, more into accounting, reporting, controlling and the compliance perspective. But if you see the recent trend, the accounting is by and large many companies has outsourced it, or either they have a set services in the company. So the non-core activities, whether it's the taxations, direct tax, indirect tax, treasuries, which is a core accounting functions, is being managed by the team. However, the major focus is working closely with the CEO of the company, having a more strategic involvement in running the business. So that is a major change in one of the functions. Second, I would say that even the decision making, earlier when the CFOs were making decisions, was more into historical data, limited availability of data, but now we have seen since morning the AI, technology innovations, digitizations, the plethora of data is available, and CFOs are making decision basis the predictive tools also, scenario analysis also. Also, if you see from a communication perspective, the earlier CFOs more into a result. Once the quarter closing is over, the year end is over, they are more into investor discussion from a result perspective, and limited interaction with the external stakeholder. But the current days, if you see, There is a much more emphasis on the transparent communications. Also, they deal with the creditors, investors, and even to the employees. So the role of a communication also getting changed. The collaborations, earlier the CFOs more into a hardcore accounting functions perspective, but now if you see, they work with all C-suite executives, whether it's a CMO, whether supply chain head, sales head, marketing head, they work very closely to make sure the decisions which we are CFOs are taking it's a holistic. It is basis the strategic directions and alignment which C-suites are having it. So if you see now the CFOs are more into proactive, technological driven, and a strategic decisions. So this is the way the roles are evolving it. Thank you for that.
Thanks, Nimit, for the insights. Absolutely agree with you that CFO has a very wide role to play, and around 5% is the only time he is putting to accounting, and he has to manage a lot of things like budgeting, cash flow, financial planning, treasury, investor relation, banking, APAR, procurement, and whatnot. And a lot of other departments in many companies have started reporting to CFO, like sometimes operations. I have seen a lot of companies, operations team reporting to CFO. IT also started coming under the preview of CFO because he's having IT knowledge also. So thank you. Now my next...
I'll just add here. So when you say it's a lot of... So I myself has undergone supply chain as a responsible supply chain head, the IT head, procurement head, and the business. And I believe Ashish is also here, which is running the business also and the CFO. So the CFOs are not the only CFOs now. They handle multiple functions and they support the management of the company in such a way that its holistic decision is being made. Thanks for that.
Thank you. So Amit, in your area, what specific challenges do you face when navigating through uncertain times, and how do they balance short-term crisis management with long-term financial sustainability?
Hello, check. Is it audible? Thanks Jagdish for asking that question, and thanks Genskis for inviting me here. Before talking about challenges during the crisis and all, I would like to say that I'm lucky enough to be in an industry which is growing fast in the boom and even growing faster when there is downturn, because it is an insurance industry when people start looking at risk management and start taking. So I think that way, no particular crisis I would talk about, but yeah, during Corona time, as I said, during downturn, this industry grows even faster. Our revenues are growing, and at the time when revenues were growing very, very fast, as you all know, sometimes we talk about cash. Cash is the reality, right? Cash is the king. So while on our P&L, we would see that, we are seeing a very good profitability position. From the cash side, we were facing some challenge because managing accounts receivables also depend upon not only your industry, but others industries, when you are in, especially when you are in a B2B business. So that point of time, we started thinking about what do we do, because we already were like 49% stake was there with Aeon, and all kind of commitments were there. But I didn't want to be in a situation where we start giving negative signals to our employees, to our customers, and then we get the funding. So what we did is multifold strategy. One was, I started with, and before looking at the strategy, I would say solving any problem, there are 4 stages. One is the, analytics on understanding the problem. Second is acceptance. Third is action, and fourth is, adoption. So what we, and because CFOs have a lot of accessibility to data, we can see the early warning signals and all that, we knew that there could be some cash situation that we needed to deal with. So one was that what we started is Project Kubera. We called it Project Kubera. We started, identifying those accounts receivables and see how we can look at the large receivables that were pending and all that. Second was we opened the credit line with our own investor. And third, obviously, other sources of cash like early refund of taxes and all. So more than $1 million we got it in within 1 year for that refund, direct tax refund. So what challenges do you typically face when I talk about crisis or problem? There are typically 3 kinds of people that you face. One is that those who understand the entire problem. I think those are the those who don't understand. First is those who don't understand the problem. I think that's not big of a challenge because you will keep on explaining. It is CFO's responsibility to kind of make people aware of what is going on. Second is those who those who understand the problem but don't do anything about it. And I think that is the biggest problem. Those are the biggest problem where CFOs need to kind of play a role of change manager and convince people, convince the stakeholders why certain action is required. Because certain people understand the problem, but the complacency that comes in with a problem, that doesn't let them take the action. So I think second kind of set of people is the biggest challenge when you have to communicate better. And third, obviously, those who understand and are supportive. So what did we do? Obviously, the communication, better communications, and you have to take people on board with you. You have to understand. We owe the responsibility to kind of communicate better with the stakeholders and say why this problem, what we are seeing as an early warning signal and what it could lead to. So as a result of Project Kubera primarily on the accounts receivable side, we today are sitting on largest treasury book in one of the largest treasury book in our industry. And we manage the kind of treasury income which is larger than some of our business units. So I think that was the learning, and that is how I dealt with the long term versus like top line, and how do I make it into the cash for a short term sustainability. So I think that was a learning, and that is how we dealt with the challenges.
Thanks, Amit. So we can say risk management is the most important part CFO is doing. And whenever something wrong is happening in the company, all the eyes are on CFO, how he's going to manage the situation. So CFO need to be prepared every time for it. Let me invite Mr. Shabbir and ask his views. Can technology help in both preventing a crisis and managing a crisis? That one in the midst of.
Hello. So there are really 2 questions embedded in it. One is, can technology help in prevention? And can technology help in managing a crisis that happens? I think we have a lot of conventional wisdom, let me call it, which is already there in the society, right from prevention is better than cure, stitch in time saves 9. I can go on and on talking about look before you leap, so on and so forth. I think one of the frameworks, I think the danger when it comes to when you're faced with a crisis is not so much the CFO or the rest of the organization being very laissez-faire about it. Frankly, the situation I see more often is people beating themselves up about a crisis which they felt they allowed to fester in their kind of organization which they could have managed. And I think for this, I personally, since I run an organization, I find Stephen Covey's concept of what is in my circle of control, what is in my circle of influence, and what is in my circle of concern which is outside that. And remember, a lot of things which are in your circle of concern and outside, you have very little say on. Even in things which are in your circle of influence, there is only so much that you can do. So first thing when you are faced with a crisis, before you start saying why it happened, ask yourself, where does this reside, in which circle does it reside? And it's not necessarily reside in only one. There'll be elements, and remember it's an organization and not an individual that you're talking about. So keep that in mind when you're looking at the whole thing. I think most often what I've seen is that where you have the right kind of talent, I'm talking now about prevention first, where you have the right kind of talent and you have people who have the time to do things other than just transaction handling, there'll be solutions which will be found. And I think technology plays a big role in ensuring that people are not caught up in repetitive, less value-added work. Technology is used for that so that they are freed up for it. Most of us have the capability, if we have the time, to go ahead and take care of it. Yeah? Like recently we felt that we were getting too many escalations from our customers. And each one of us has a need to take some reflex action on that. And then we stopped. So I think whenever you are faced with a crisis, the need to stop, pause, take a step back, bring a perspective onto it, before you decide what you want to do about it becomes very important. But I think technology in prevention plays a very useful role by releasing bandwidth of people so that people can do whatever is required to be done. One of the symptoms to look out for in a crisis, having said about the circle of influence, etc., is your organization repeatedly going through a crisis more often than what others in your industry are going through? That is a symptom of something a little more deeper. I was surprised when I heard that when you go through repeated crisis, it releases dopamine. And I'm like, give me a break. Dopamine, really? I thought dopamine is when you're feeling nice. And they said, no, you actually feel very nice because you feel you're wanted, you're indispensable, you're required now that a crisis is there. And here I am the warrior with my sword, knight in shining armor who has come to take care of things. Yeah? And that is something to watch out for. So ask yourself, are there too many crises and am I becoming too much of a crisis manager? Then the solutions that will present themselves will be very different. When it comes to managing, I think one of the things, as well as prevention, another thing to remember is, I think industry today for your company to succeed requires the organization and therefore you as the CFO to take more risks. And if you take more risks, there will be more failures. Have you factored that in? That is provided you are taking more risks. And I don't want to repeat the cliched thing of the biggest risk you can take is taking no risk at all, but that's a fact. Yeah, it's cliched because it's true. So you have to take risks, and probably we are in an environment, especially if your product is beginning to get commoditized or you are finding brand differentiation is becoming less. There is a need for you to go ahead and take more risks. We talk in very nice terms about innovation. Remember, innovation is a risk. Innovation is not this nice, lovely garden path that you walk on and then at the end you get that apple which you can eat forever and be happy. Innovation comes with a lot of pitfalls along the way, and therefore you need to be in a position to go ahead and do it. And I think where technology can help you is, like anything that happens, you first need to do diagnosis and then you need to decide plan of action. What I mentioned earlier about don't go for the reflex action. Imagine you went to a doctor, you were sitting outside still waiting for the doctor to go ahead and consult you, and his compounder comes and says, take these red medicines. What are you talking about? He doesn't even know what's happened to me. And surprisingly, a lot of us do that when it comes to crisis. Let's reduce costs, let's stop payments for the time being so that, cash flow is conserved. I saw that happening during COVID time frame. That was the first reflex action of a lot of people. If it is short term, it is okay while I'm figuring it out. But please do a diagnosis, and I think where technology can help in diagnosis is in terms of the analytics which it can provide, going back to past data and looking at what is it that happened out there which you can go and get an idea of. And I have actually seen people who use our spend management solution during times when profitability is the crisis that they are facing, if it is. They've actually, instead of the traditional thing is reduce spends. I've seen CFOs who said the decision I've taken is I will increase good spends which lead to more sales or more brand value creation and reduce the bad spends. Whether they be wastages, whether they be different kinds of things which could be avoided. I mentioned during my presentation about discretionary expenses. Get control on those discretionary expenses. We just had a session before this which talked about supply chain finance as well as the channel finance. If cash flow is an issue, see if there are new technology options like these which were just discussed, which have today become available, instead of trying and using the tried and tested method. I think there are lots of options today which technology is opening up for the CFO. Do you have the humility to look around? Do you have the humility to ask others and say, I'm in a problem, can you help me? Instead of being this person who knows everything and therefore refuses to be vulnerable. I think in a crisis, vulnerability is an asset if you can have that. And if you can display vulnerability, you'll be surprised by what kind of solutions, including solutions in the technology area, can come up and you are able to address the situations that are there.
Thank you, Shabbir, for the insights. Absolutely agree with you that lot many companies find themselves in crisis more often than we like to admit. Some crises are specific to a company, some are to industry, others are to the geography we operate in. And some, like recent pandemic, it doesn't matter how specific or how broad the crisis is. I believe CFO has a critical role in navigating their company through the rough waters caused by the disruption. So let me ask Mr. Shirish, what are his views and key indicators or financial metrics that CFOs prioritize when managing a business crisis? And how do these metrics differ from regular performance tracking?
Yeah, thanks, Jagdish. I think as far as crisis is concerned, it can be both. One driven due to external driven factors and one to internal driven factors. Now, external driven factors, I think we have all lived through practically when COVID happened. You know, when the revenues are not happening, and we had all the expenses in terms of employee payments, some amount of creditors keeping happening, and nobody knew how to keep paying the salaries. Everybody went for a salary cut. So, you know, so this was a knee-jerk reaction to the crisis. And second, internal driven crisis is where, you know, you keep piling debt and are unable to repay it. So you know, there is no one size fits all solution to, you know, in terms of tracking the ratios or the figures in a balance sheet which can be answered. In terms of crisis, I think most of you guys would, you know, just at a first look of a balance sheet, you will know where the problem is. Is it in terms of the return on assets, or is it in terms of the revenue and the cost mismatch, or is it in terms of the working capital mismatch, or what? So as far as the ratios are concerned, if it's more related to debt, and if you see the companies who are, you know, there is an increasing number of companies who are going to NCLT nowadays. And, you know, if it is more related to debt, try to track ratios which are more debt focused. Is it debt equity? Is it quick ratio? Is it current assets ratio? Is it interest coverage ratio? Then if it is more related to like external factors where the company has been affected because of the more overall business environment or the industry slowdown, then you can track certain ratios like daily sales, daily cash in. As Amit rightly pointed out, you know, in terms of crisis, cash is the king. Anything and any metric which tracks cash is itself a you know, important ratio to be followed. It may be anything, whether it is how much daily cash you earn, how much daily cash gets paid. And if you try tracking daily cash in and daily cash out in any crisis related organization, I think you will come to know where the solution you know, needs to be found out. If the daily cash payments are more, try to, you know, address the payments than the daily cash in. If the daily, and also parallelly, it cannot be like, you know, one solution is for both for cash in and cash out. You have to, you know, and it is not that one solution will work for all industries. For some manufacturing industries, the margins may be an issue. For service related industries, the service quality may be an issue. So what happens is, in a manufacturing organization and in a service organization, the crisis timeline for tracking may differ. Like for example, in service organizations, you can still have a daily metric. In terms of crisis, what happens is generally the industry benchmark for tracking is quarterly, your quarterly results. How are you performing quarterly basis? But in crisis, you don't have a crisis situation. You don't have a leeway to, you know, track yourselves on a quarter. Every day is a you know, lifeline. So every day, if any metric which helps you track the cash flow and the earnings on a daily basis, I think that should be the metric which should be followed. It can be anything. It can be daily cash in, daily outflow, or daily cash from operations, daily what margins are being generated, and daily what payments are being made, anything. So I think that is what I'd like to suggest in terms of ratios. Otherwise, from accounting perspective, everybody knows that revenue ratio, EBITDA ratio, margin ratio, interest coverage ratio, working capital ratio, current assets ratio, quick assets ratio, then debt service coverage ratio. So all these ratios are there, but when crisis is there, you'll have to, apart from these ratios, you'll have to have an additional bit of tracking mechanisms which help you track on a daily basis, which are not generally covered by these sets of, ratios which have been hitherto been, recommended for normal business operations.
Yeah. Thanks, Shirish. Absolutely agree with you that we saw COVID as the biggest crisis when most of the companies has zero turnover and zero bottom line. So I can remember how we used to manage the situation doing scenario planning on a daily basis and was able to manage. It was very difficult situation as we do not had any idea what will be the top line next week or next month. So really it was difficult to manage. And let me ask Mr. Ashish, reflecting on his past experience, can you share a case study or examples where a CFO's strategic leadership was pivotal in steering an organization through challenging business crisis?
Hello? Sure. Thanks, Jagdish. So when the word crisis or the business crisis come, I remember my nightmare. Around 2 years back, it was 11:30 p.m. I was sleeping happily. And then I got a call from my CTO. And then he told me that, please join the call. There is an important thing. And our CEO wants to have a joint call with us all. I joined the call. And our CTO told us that there is a cyber attack in our company. So somebody has sent a ransom note that all your systems has been hacked and you have to pay this much amount, $1 million amount, to open it, to get the keys for this. So it was a very crisis and typical situation. And we were just discussing, and then my CEO suggests that Ashish will manage the entire thing. So I was wondering that being the CFO, it's not my job. It's not something we have to create a balance sheet or P&L and all. It's the job of CTO and the business people. But on the second note, I thought that I trust let me trust my CEO, and let's take this opportunity. What's the harm in taking this opportunity? So I happily took that opportunity, and then the real fun start. So where I realized that it's very easy to count the numbers and count the profit and count the revenue and all. And the real fun is in generating the numbers, in managing the risk, and in managing the business. And the entire thing started after that. Immediately, the first important thing was the customer, because in any business, customers are the king. So immediately, I set up a call with all the sales head. And I also wake up my legal head, because the important thing in that is the legal agreements. You have to immediately inform to your customers as per the BCP guideline or as per the contractual guidelines. And the important thing which we decided is to touch base with our customers. So I was involved in drafting the note to the customers, where it should be very carefully drafted. We should not open each and everything, and we have to convince the customer, and we have to give confidence to the customer that everything will happen smoothly, and we will take care of such situation very smoothly. So the important part was taking customer into the confidence, talking to the sales people, sales leads, and then next day the entire thing started with the production team, where we have to consult them, we have to guide them that don't do the production on these areas and don't touch this, because we are in a business of content and data, where content and data of the customers are very, very important. So we have to tackle it very, very carefully. And then there is an all-round discussion with all the support department, particularly with the IT team on the important systems, important IT solutions, cybersecurity solutions, We have to talk to the lots of cybersecurity agencies. I was part of all those discussions. And then the real challenge come for discussing with the threat actor, the person who was asking the ransom amount. So that was the most important part, because my CEO suggested that I don't want to pay anything, but I want to be safe. And customers are shouting that when your system will be up and running. Production team is shouting, IT team is shouting, because everybody is at like a steady state environment. And then we had to very carefully discuss with the threat actor. We have to use the words where we have to come out the situation, and we have to take some time, so that if we get some time, we can manage this crisis situation by having a backup in place, and by transforming all our important data in place. So we literally passed the time with him. And then next day also, there was again a discussion with him. And another important aspect is the insurance, where you have to talk to the insurance agencies. And I'm not talking in front of Amit, but they are the nasty people, because whenever the crisis situation comes, they are the hardest people to file the claim and to give hell lot of documents and all. Absolutely. So we came out with that aspects also. And in the end, we came out with that situation, and we didn't have to pay anything. And we came out with the entire crisis very, very successfully. So that was, as a CFO, that was a very great learning ground from me. Because first of all, we were out from our usual personality or usual environment of numbers. And it was a multi-divisional and multi-department interaction. And it was a great responsibility of managing the crisis situation, where you have to take care of each and every aspect. You have to take care of the legal aspects, you have to take care of the business aspects, the production aspects, the operation aspects, and the future aspects also. So it was a very great learning ground for me. And the important part is that nowadays there is a transformation in the roles of a CFO. So they should always consider themselves as a business partner rather than a number generator, because the real existence of the numbers are because of the existence of the business. So first you have to take care of the business, then the important aspects of the compliance and the numbers come into the picture. So it was well managed, and it was a great learning for me and great transformation as a role of a CFO. And after that, lots of things got added in my role. Like, in addition to the CFO, I am managing the entire IT, I am managing the entire procurement, and I am also managing the Europe sales. So because of that incident and because of all those crisis things which get imbibed in me, that helped in transforming my role, and I'm now serving my organization in a more better manner rather than just only as a CFO role.
Thanks, Ashish. Thanks for the insight and real case study. Also good to know that apart from finance, you also handle sales and operations. So I'll request Mr. Rajesh to also give an example or side or explain a case study, real life case study.
Thanks, Jagdish. I would like to here first mention that I am a very latest addition as a CFO. I have taken
over. Bit louder.
Not
working.
Hello, is it here? Yeah. I took over role of CFO just 2 years back. Okay. So probably after hearing all these senior guys, I can correlate myself very well. Just before becoming CFO, what I was handling and what do I do now, or what challenges I face now. And out of that, I will try and give some examples. I think day-long session I joined, of course, post-lunch. I feel, after hearing all this and probably looking at the earlier sessions, the designation of CFO needs to change. And I would like to hear if somebody has a better designation. What I feel is I think we should change the designation to Chief Value Officer rather than Chief Financial Officer. And why do I say that? I think any organization or any activity has to add a value to whatever they do. Okay. Now, how does a CFO add value? A CFO adds value by protecting the assets or by safeguarding the company against risk of fraud or risk of leakages, etc. That is one aspect of it. The second value addition, what a CFO does is liberating value. Whatever I hear, automation, etc., I think a function of the CFO should result into liberation of value. When I say liberation of value, you are supposed to put controls in place, but those controls should not hinder the business growth. How do I do that? I have to adopt systems. I have to simplify the processes. Let me give you one example here. We are a company which is laying the pipeline infrastructure to reach to your individual houses, to reach to the CNG stations, or to reach to a industrial customer, or to a restaurant. Now, as a company, we get only 5 to 6 months to do the pipeline work on the ground, because the municipalities or local authorities, wherever we are operating, does not give permissions post-rains. And post-rains also, they start giving permission somewhere around October, November, and then it goes up to somewhere around May. Now, it's very critical for a company of our kind that I utilize those 5-6 months very effectively. Now, how do I simplify the process? If I have, every proposal which requires payment to the local authority comes to a CFO or a senior person, it will hinder the process. So we have simplified the process. We give a blanket approval for the year, deciding which are the pipelines, which are the areas where you will do the work. We already know the rates, because most of the municipalities and local authorities publish their rates in advance. Only if there is a change, then there is a requirement of an approval for the project guy. Otherwise, he need not come. Blanket purchase order is created in the system, and he can utilize the value to the extent he requires, so that the work moves fast. Okay. Coming to the third aspect, I think we as CFO, or I as a CFO, has to generate value. When I say generate value or create value, what do I mean? I have to find out ways and means to optimize costs, to come up with business opportunities where I add value and make the organization sustainable. Lastly, I think already touched upon by somebody, communicating value is also very important. That I have realized after taking over the function of CFO. When you say communicating value creates value as well. I think it is only CFO who is in the position to put the story empathetically and after understanding the business properly to the financials, to the investor community, to the regulators, and that creates value, or the value which you see in the market as what the company deserves to be valued at. So that's the fourth role I consider myself. Now coming to the, I think most of them touched upon, each and every function in an organization, be it, production, projects, marketing, they are all there to create value. Let's say in case of my company, a marketing guy will always like to achieve his target of selling volumes and at the lowest price, okay? Because target for him is to achieve volumes. For a project guy, it will be how many kilometers of lines and how many CNG stations he sets up in a year, okay? For an IT guy, he will have a target to put good systems in place. Now, only common thread, or the person who understands how do I keep all this thread together and add value to the organization is only CFO, in my view. Whatever I realize, otherwise everybody will target in their own task, but the CFO is the only person who will understand at the end of whichever activity, whichever function, it should add value to the organization. When I say value, I think Amit said that cash is king. I see whenever any activity is taken up in the projections, cash flow projection is the king. If an automation does not add value or cash flow, if a new activity does not add, I think it's not worth taking up. Okay.
Thanks, Rajesh.
Yeah.
So let me come back to Nimit and ask the last question to him. How crucial is it for you to collaborate with other C-suite executives during times of crisis? And what strategies facilitate successful cross-functional cooperation?
So, Thanks, Jagdish. What I suggest, if you say that how crucial collaboration for C-suite, so definitely, as everybody mentioned it, CFOs knows the finance very well. Also, they understand business really well. They have a very good insights of the business. So they are in a better position to take any calls, being their seniority also as well as understanding perspective. But any decisions would not be in a isolation. So when the decision has been taken, they need to collaborate with each functions to make sure that decision is just sound enough and we are not making any mistakes in that. So suppose if we wanted to, for example, if you want to launch a new product also, so it's not only the marketing team would say, this, what is the recommendation from the sales team, productions team, supply chain. So it's a holistic call. So the one is collaboration is required for making informed decisions. Second, about the resource allocation perspective also. So when every organization is having a resource constraint, and if resources has to be allocated, how well we need to allocate it, and that everybody is aligned to that, to a strategic alignment of the organizations. Even for the, as I said, the only thing constant is right now is the change is a constant. So change management is definitely again a collaborative approach in the organization. It cannot be a one function. Transparent communication to investors, even the creditors and the employees to build and protect the confidence from their end. So I think collaborative actions is very much needed at a CFO's level, and some of the strategies I would say for having collaboration with the different C-suites, executives, is form a task force committee, rope in different functions in that, and give an assignment. So that would be again, each angles would be made us sure of it. Many organizations are having now set KPIs. So KPIs has been set between a couple of C-suite executives. So if you see, the top line is nowadays like in the KPIs of every function. So earlier what happened, the CFOs are more of a controllers. They may not be enabling the top line perspective, but now CFOs are having even the top line in their KPIs. So that way is again a collaborative approach is there. And even many workshops are there which can be a cross-functional workshops, and where everybody has been given a training on that. So these are the few strategies which we can adopt in the organizations. I think that answers your question.
Yeah. As you mentioned, we actually require cross-functional trainings. Everybody should know finance. Maybe he's working in operations, sales, or anywhere, but he should know how to manage the money. And recently, we have also conducted some sort of training for non-finance guys, and that has helped us to close the books as we get proper provisions and people do understand finance. That has helped us a lot. Since the time is short, let's conclude the topic. We discussed a lot on changing role of CFOs in modern context. We got expert opinions on changing roles of CFOs. Also, during any business crisis, time and resources are limited. We have to draw out from the things we do regularly and put efforts into the few things that matter the most. Let us take questions from delegates, if any questions are there.
Hi, my name is Pratik Gadia. I represent Almus Risk Consulting. My question is for Nimit. You mentioned in your professional journey you had a chance to become a CEO. So just wanted to take your perspective. What is the different lens that you saw when you became a CEO, which maybe as a CFO, maybe or a case study that you would have or an experience for all these young CFOs. How does a CEO look into things, and what CFO would not have looked in the in his journey?
Can you please repeat the question?
The question is, when you became a CEO from a CFO, what is a different lens or some instances that you would like to share which you maybe did not look when you were a CFO, which can help others to understand in their journey when they are aspiring to become CEOs?
Okay. Pratik, very good question. So when, first of all, it was like a ad interim role for me for a CEO. So it was not like a career transition. Since the organization CEO has left twice in the organization and finance understands business really well, I was handling for 6 months as a CFO and CEO both role. So when I took over the role, the biggest challenge which I've seen it as a CEO role was managing the each stakeholders. So when we handle from a CFO side stakeholder management, again, but there is a decision maker is the finally CEO is there. So we arrive at the pros and cons. We say that option 1, option 2, and option 1, these are the pros, option 2 is these are the cons. And then we present to the CEO, and the final decision maker is the CEO. So many times taking a decision, because giving options and the pros and cons and giving us suggested options is relatively easy. But when you have to take that call and then you have to own that call, that was little challenging, which I've seen it. And even managing the, within the different functions, sometimes the change communications, because the crises are like becoming a everyday phenomena, and how to handle the crisis management and the change management, which when I've handled the CEO role, I found it much more insightful than as a CFO when I was handling it.
I'll just add to what Nimit said. See, the CEO's role is primarily to grow the organization. So CEOs are always under a growth trap. Okay, they will bypass or try to bypass in many circumstances the financial functions and try to override them while trying to drive that growth. Whereas a CFO's role is to try to prevent any untoward incident which can happen while driving that growth. So, the history says any CEOs who have not listened to their CFOs have gone through those crises. So,
Thank you.
Thank you for an interactive and amazing session. A big round of applause for them. And with that, I would request Mr. Ishant Sharma, Enterprise Business Partner, Tata Nexark, to please come on the dais. And we'll go ahead with the felicitation of the moderator and the panelists.